Hey everybody, this is Ryan Mallory with the Swing Trading Splash Zone at SharePointer.com. I had a trader in the Splash Zone ask me just recently, do I scale into positions or not? And what he meant by that is, do I get more long in a particular stock as it becomes more profitable? And the simple question to that answer is no, I don't do that. And the reason why is because it stems from a risk-reward approach that I take in the market. You see, I want to be able to protect profits as soon as possible. And when I'm adding more long exposure as the stock becomes more profitable, I'm decreasing from a percentage standpoint how profitable I am. Yes, it has the opportunity for me to become more profitable on a greater dollar amount as the trade wears on, but from a percentage standpoint, I'm not profiting as much. And so it makes the risk management side of it even more. And anytime you increase exposure in a position, it also increases the emotions. And as traders, we want to be able to keep the emotions out of the game as much as possible. So I'm going to actually use a trade that I was stopped out of today and go over it in detail about how, had I scaled into the trade, I would have taken a loss. But today I actually took a small profit on it. So here you have RH, Restoration Hardware Holdings, and essentially the trade I got in at 138. It went up a little bit, but there was a sell-off today, and I kept moving at my stop loss, but I got out for like a 0.5% gain. So it wasn't a big amount. I think essentially I got in at around 132, and I got out at 176. So it wasn't an impressive trade by any means, but I didn't lose on it. I still maintained my capital. I came in with a certain amount, and I came out with slightly more than what I did, which is better than losing. So for the case of this trade, I'm going to say that I got in at $100 a share because just dissecting the trade, it'll make it a little bit easier here. But in any case, I got in on the May 8th here. So that would have been about a week ago. And you could see it was starting to break out. It had already broken this descending trend line really well. And then it started to move a little bit higher and a little bit higher, but it really wasn't going anywhere. And there was a number of times in the trade where I was actually thinking about maybe I should just go ahead and cut this trade. But it kept holding on to this 5-day moving average. And I kind of have a rule of thumb that if at the very least it's not breaking the 5-day moving average, well, it's probably okay for the time being. So I usually like to at least see that, start to get breached before I just go ahead and book profits on a trade. But up until today, it hadn't done that yet. So let's say, for the sake of simplicity, I get in at $100 on May 8th, and it's going up. And my plan is once I have about 2% in profits, I'm going to add another 10% to the trade. So then I'd be 20% long on that. And it sounds good on the surface to keep adding to winners, but don't add to losers. But in reality, and I know there's some traders out there that do it successfully and everything, I'm talking about from personal experience and from my personal opinion, is that adding more to a long position can really get the emotions going, and it can really mess with the risk reward on a trade. So here you have the stock at 100 where we would have bought it on May 8th, and then come the following day, May 9th, it reached actually 102.41. So the next day we would have actually have added another 10% increment to this particular trade, which actually increases our cost basis as well. So if you are looking at $100 entry price, you're adding another at 102, and it's the same amount in terms of dollars, you have a cost basis of $101. Well, our cost basis went from 100 to 101, which also skews the risk reward sum. Well, today I got stopped out at 175. So that would have made it about a 0.75% profit on that trade. And had I scaled into the trade, that would have made it to where I actually took a loss on the trade. It would have been a small loss, but nonetheless it would have been a loss. And that means that you're not adding to your bottom line. So you could see this is a perfect example of how adding to a winning position actually creates a losing position. And now we're talking, pennies on the dollar here, I get that. But it can also happen for bigger trades too. Let's say that you get in at $100 and it would have gone up to $105, and along the way you go ahead and add more capital at $105. Well, your cost basis is $102.50. Well, let's say it pulls back to $102. Well, then you took 0.5% loss. However, had you just stuck with $100 as being your entry price, you would have actually come away with a 2% profit. So over the long term, doing that, it makes a big difference in your portfolio. But on the other hand, the critics will say, but you could have that 20% exposure go up to $110, and you're like making 5% on double the amount, or 7.5%, on double the amount, rather than if you would have made 10% on the original amount. So I get that argument too, but I also would say against that, trading is not supposed to be all in one trade. You're not trying to make your entire year's worth of profits off of one trade. Trading and trading successfully comes from executing trade after trade after trade in a deliberate and risk management kind of way that allows you to walk away with most of your profits. And so I don't get married to my trades, right? I don't have to have validation from one particular trade. I don't have to have a big winner from one particular trade. What I want to do is just have a history of making good, solid trades from one trade to the next. Whether it's a loser or whether it's winner, I manage the risk and I let the winners run as much as possible, and then raising the stop losses and eventually getting stopped out and walking away with a good amount of profit. So that's my belief as it pertains to scaling into a trade and adding more as the stock becomes more profitable. I don't think it's the best method of risk management, and I think it can burn you in the long run. Thanks for watching. I hope you enjoyed the video. Please be sure to like and subscribe to my channel, as well as check out some of these other cool videos that I've done. And if you want to swing trade with me each and every day, you can do so by going to www.shareplanner.com/splash zone. Thanks and happy trading.